Why silver over gold?
When you look at a ratio right now of roughly 95 to 1, it's the greatest value in relation to gold, literally in 6,000 years. And I know that sounds almost make-believe, but it's true. In terms of value, in terms of undervaluation, silver might be the most undervalued commodity on the planet, and I think that it's one of these once-in-a-generation type of opportunities.
Hello there, my friends. Chris Marcus here with you for this week's physical silver and gold market update with Andy Schectman of Miles Franklin, who apparently, according to some of the folks who are catching the live premiere broadcast of your calls, Andy, you've been compared to James Bond. And maybe you're like the James Bond of the silver world. It's nice chatting with you each week, finding out what's going on in the physical market. So would love to welcome you back on in today. How are you doing?
I'm doing good. I'm doing good, brother. Hey, I've been called much worse than James Bond. I could deal with that, and that's cool. I'm okay with that. How you doing, Chris?
I'm good, and I'm having fun imagining you with a James Bond-like. You can let him have the gold. I say let's just go for the silver market. Andy, lots to dig into today, although a question that does come up from time to time, people wonder, why is this guy talking about silver all the time? At least gold, would make sense. That's what central banks buy. What would you say to someone, because especially with the stock market getting beat up pretty good yesterday, people are coming into metals. Why silver over gold?
Well, look, I at heart am a gold bug, and I think I wouldn't bet against gold right now at all. In fact, I think gold is, due to its reclassification as a tier 1 asset, Chris, I think it is going to be a central theme for the foreseeable future in global macro finance. But when you look at silver as it relates to gold, first it's important to understand that there's a 90% correlation throughout all of history in the movement of the two. And I do believe that when you look at a ratio right now of roughly 95 to 1, granted it was about 120 to 1 when we talked a couple of weeks ago, but at 95 to 1, you are within, you're within grenade blast anyway of the lowest it's ever been in human history in relation to gold, or the highest it's ever been, however you want to look at it. Said otherwise, it's the greatest value in relation to gold, literally in 6,000 years. And I know that sounds almost make-believe, but it's true. In terms of value, in terms of undervaluation, in terms of disrespect, silver might be the most undervalued commodity on the planet, and I think that it's one of these once-in-a-generation type of opportunities. The neat thing about it is that it will mirror gold. It will follow gold, and as gold goes, so too will silver. The disparity that we see right now, Chris, that 95 to 1, that was 120 to 1, in my mind, that's specifically due to gold being reclassified as a tier 1 asset because the central banks have been gobbling it up for the last year and a half. So the central banks are gobbling up gold, creating a distortion between gold and silver. I think when gold reaches its $1,930 all-time high in U.S. dollars that we saw in 2011, you'll see a slingshot type of reaction with silver. Bottom line is, silver really is a hell of a value, as good as it gets, and it's too hard to ignore, and I think that's why we've been focusing a little bit more on it. It's a once-in-a-generation type of value, and those are things that aren't easily said very often.
Yeah, and plus, Andy, as I know, we had fun giggling about the other day. If they called it the Greenspan put for silver investors, maybe we could call what Jerome Powell is doing the Powell call option on silver. I mean, the guy's basically guaranteeing. I mean, if there's anything that could ever take out the manipulation in the gold and silver markets, it would be Jerome Powell's printing press, which he confirmed on Wednesday has no end in sight.
Right, and and it's funny, they talk about keeping interest rates lulled until for the foreseeable future into 2022. And quite frankly, I don't see how they ever stop the cycle. The Fed has really painted themselves into a corner, either through monetization or default, and either way leads to higher interest rates ultimately. But in the meantime, yeah, this is keeping the Federal Reserve up at night, and I don't think you'll ever see interest rates, at least if the Fed has anything to do with it, that will ever rise substantively. When interest rates do rise, watch out. It will be the greatest depression of all time. So that's one of the perils I think that the Federal Reserve really is very concerned about. And deep down, I guess we all should be at this point.
Well, I would agree where I say the dollar blows out long before the Fed raises interest rates, yet I would throw a twist in there. I don't know if this has to be, maybe there will be some period of adjustment, but it's almost like if you lose the mafia shaking down 90% of your income with a gun at your head. I think there's actually a lot of great things that will come on the other side of this. So, that's why, it's not the way I would design it, but to me, investing or anything in life can be a matter of accepting what appropriate preparations. Certainly makes the journey a bit easier. And we did have someone write in your thoughts on we're recording this on Friday. So on Thursday, we had quite a crash in the Dow Jones and the stock markets. And our viewer was wondering how that would affect gold and silver.
Well, it's interesting. Lately, for quite some time, actually, every time the stock market gets hit really hard, so too does gold. And I'm not going to try and espouse conspiracy theories as to why that happens. The mainstream answer would be, well, the market gets crushed and gold is very liquid. So when margin calls happen and people need to rush to liquidity, they throw the baby out with the bathwater. They sell gold right away. It provides quick liquidity. I don't believe that. I mean, I guess deep down, I feel that it's more along the lines of trying to blur the rationale people have for running to gold when things get tenuous in the economy and with the stock market. The Wall Street's claim of concerns over coronavirus. Can I say bullshit? I mean, I think that the short memory that people have in this country is indicative of these types of swings, these irrational swings that we try to justify with things like, well, we're concerned about, well, what did people think would happen? And, I guess the probability, no matter how you feel the reaction has been about coronavirus, the probability of a second wave, and maybe even arguably the first wave never left, but to see as the economy opens back up, to see increased cases and hospitalizations of COVID is only to be expected. And, if we draw a parallel between what happened 1929 through 1932, it's eerily similar, at least on the first 35% fall, almost identical. On the retracement back up, almost identical. The time blurring the pain, almost identical. And in 1929, as we headed towards 1932, after most of the gain had been pared back off the initial 35% fall, it ended up losing 80% over 2 years. And the parallel I would draw is that, do you really think that we will see this economy come back in any short of 2 years? When restaurants, an industry, the hospitality industry, is not an easy industry to survive and succeed in, even when times are great. To have these types of industries working behind glass shields at 30 and 50% occupancy is not a recipe for success. And I guess all I'm simply saying to you is that I would be very leery of a stock market that continues to do anything but bleed away based upon anything other than the Fed propping it up. If the Fed steps away from this, I would say to you, let me just say things succinctly. Our economy suffered one hell of a wound and a deep scar, and the stock market is not reflective of that. And these moves up, in my opinion, have been indicative of the Fed sponsoring buying ETFs and buying Dow and S&P futures. And the move down, Chris, those are the baby boomers and the people who have been in this for a long time, who are pulling out and looking for a place to go. And I see them coming here. They used to go to the bond market, but with interest rates at or near zero, that doesn't happen. And they're coming into this market. And this is part of the reason why we see the price inflation with high premiums, because you have big money. This volatility that we see, to me, is people pulling out of a stock market that is being levitated, and they know this, irrationally levitated by the Fed, and they're using it as an escape valve. And their first stop, what used to be the bond market, is now here. And that's why we see big premiums, and that's why we saw delivery delays for February and March and April. And that's why the sweet spot we have right now, Chris, is something that we should talk about too. There's a product sweet spot right now. It's a gift, if you will, that I think people should pay attention to.
Well, it's interesting how you mention, and that's perhaps what I've been thinking about for the last 10 years, that when you trace any of these factors far enough, whether it's the stock market weakness or what the central banks are going to do, I mean, again, you don't know the timing, but if you're in the fortunate position of being able to invest patiently, that's, again, how I am sitting here talking about silver every day. Although, Andy, something I know people are interested to hear about, I've been getting all sorts of reports. I heard earlier this week people are having a hard time finding silver in England or anywhere in the UK, actually. We've had Andrew McGuire talk about the wholesale shortages. Apparently, I've talked with someone who does business with the Perth Mint. I guess they're taking new orders but not able to fill them for any foreseeable time. What are you hearing out there? And again, along the lines of the key question, is this just because businesses have been shut down by Corona, or, how serious is there a shortage of metal on a longer term basis?
Well, I mean, look, the answer on a long term basis is absolutely. I mean, silver is a depleted asset. It's found in nature in something called epithermal, meaning it's very close to the surface. And so the low-lying fruit or the big deposits has been plucked or found many, many years ago. Over 60%, I think the number was 66% of the mines across the globe were shut down due to the coronavirus. And so when you realize that, and the majority of all the refiners in the world are located in Switzerland, on the border of Italy. And so they were all shut down. And so if nothing else, we have leading into a fall, talk about a confluence of events. You have the election, you have all these stimulus programs wearing off, and you have what could be a massive glut of demand facing a very stiff shortage of supply, not just from the standpoint of what's happened with Corona. I mean, and that's created immediate shortage. But when you realize that silver in general is in short supply, that, the United States Geological Society, it's a division of the U.S. government, I think I'm getting that name right, they came out a few years ago and said due to shortages, they felt it would be the first element struck from the periodic table of elements. So in general, we're running out of silver. And, really what could really supercharge that would be a enhanced and increased investment demand that has been tepid at best for the last 7 years. So when you look at the fact that you got an awakening of sorts in investment demand, coupled with a fractured supply chain, one that was damaged and wounded badly in the first quarter, if we were to see a surge in demand heading into the fall, I would argue that it will define the marketplace. In fact, as you and I have talked before, Chris, I have for years, and you and I, long before this topic ever came up, discussed this. For years, my public speaking centered around this theme because I've seen it over and over and over and over and over again over the past 20 years, where in times when no one's buying it but the deepest gold bugs, The mints run out of product. And I have said for a very long time that the market will be defined two ways, and we've talked about this, by the outsiders, the people who don't own much in the way of metals at all. They'll view it as missing the boat, price got away, too expensive, I'm too late. But for the people who listen to this program, well, they'll recognize it differently. They'll be glad that they own some of it and that they've gotten in early enough to buy good stuff. They'll realize they wish they would have bought more, but they'll characterize it mostly by the inability to get good stuff without paying a tremendous premium. And I think that will define the marketplace, Chris. I think the shortages of supply have always been. There have been seeds of that forever. That's growing with demand now, and I think it will define the marketplace. Honestly, truly believe it will define the marketplace in the future.
Well, Andy, I know you've mentioned that before, and last one I have for you here today that ties in with that. This was from Andrew McGuire, an email that he sent me, I believe it was June 1st. He said, I had permission to share this with our audience. He says, Swiss refiners are now putting silver orders on hold to meet very large gold demand. We were anticipating weeks into July. Now our orders are pushed out months. For size, there are no offers to sell, mate. I like to imagine the British accent there. Favorite price is a joke. Comments on that?
Well, yeah, I mean, I believe it. I know the Royal Canadian Mint stopped making everything except gold and silver maple leafs to meet, big demand. They stopped producing other items. I believe that to be true. And on a macro perspective, I think, there's a massive demand for gold. That doesn't undermine or take away from the huge demand for silver. But if you're a refinery and you're getting, in essence, paid by the hour or by the project, there's far more money per hour in gold than there is in silver. I think that, that's just more of the same. We're setting up for a shortage of supply. And people have short memories to the extent that, they're saying the stock market falls by 1,800 points because people are concerned about the coronavirus. Well, come on. I mean, really? And it's the same thing here. In February and March, everyone was saying to me, geez, I wish I would have bought this stuff in November and December when it was cheap and it was available because, now that there's massive delivery delays, I wish I would have done that. Well, we're going to see those delivery delays again. And especially when you realize that the mines were closed, the refineries were closed, and now the refineries are backseating silver to gold, which is understandable if you're in a business of making money and you're a refiner. I get it. So all of these things point to a confluence of events leading up to the election where silver could be very difficult to get, especially if things get funky with the economy or with coronavirus or with another lockdown or with a second wave or with more Antifa bullshit or any of this stuff that's happening that could very quickly be the fuse that lights, the bomb again. And I'll tell you something. In March, it was difficult to get product. It was really difficult to get product. And we've tried to stay ahead of this the whole step of the way, every step of the way. And, without trying to be a salesman, I know I get accused of that, but I'll tell you this. I do believe, and I will believe until proven otherwise, that before this is all said and done, unless things get much better, similar to the way they were, inability to get product will define this market, and it will come to a point where all the money in the world won't get you anything that you really want. So, I don't know, Chris. It's interesting times, that's for sure.
Well, Andy, you know who you really remind me of?
Who's that?
You actually remind me of a 1998 Warren Buffett who actually picked up a big chunk of silver back then. I believe it was even more than the Hunt brothers. And what was interesting is that he was citing many of those same reasons and many of the same factors that you talked about. So It makes a lot of sense to me. We'll see what the future has planned, but I appreciate you joining me on the show again this week, providing an update. And we will see what happens in the next week or so. Certainly fascinating times out there. And I also appreciate that you've made Arcadia at Miles Franklin. You are still matching and beating any of the online prices in the industry for folks who are looking for gold and silver and right in there. Right?
Absolutely, absolutely, and we'll continue to do that for as long as we can. And all they need to do is send an email with Arcadia in the subject line to Arcadia at Miles Franklin and let us know what you're looking for. We will match or beat any price in the industry. We have a tremendous amount of stuff in stock right now. I've made it very clear to my operations department that we want to be loaded up as much as possible heading into the fall. And until that lasts, we'll have supply with the best of them, prices that will beat everybody or match anybody online. And we will be more than happy to continue to do that as long as we possibly can, Chris.
Well, I sure appreciate that. Andy Schectman, the James Bond of the physical silver world. And folks, in case rather than hearing it from Andy, you'd like to hear what Warren Buffett actually said at his 1998 shareholder meeting. Well, we got that coming your way, and you can hear him talk about silver now.